So, Brian, it's great to be here with you and, really get your perspective on what's going on in the energy industry as we deal with these incredible, horrific scenes we're seeing play out in Ukraine as Russia is the third largest oil producer behind, Saudi Arabia and the United States, depending on when you're counting. We haven't been embargoed like Iran was yet. And I say that, not knowing how the situation will evolve. But one of the things we know already that we've seen this incredible impact on energy prices as a result of Russia's invasion of Ukraine. And with that, we have seen some smaller producers, even before that, start to pick up their production. The larger producers have been, more disciplined and less likely to pick it up. Talking to the chief economists at the large producers, they seem to think more production is coming online later this year. How do you see where the energy companies need to be thinking about this situation, especially when we're thinking about, our clients in this space?
Yeah, so it's an absolutely, well, crisis is the right word, isn't it?
Yeah.
It is a crisis. And, I do think that some of the independents, that you mentioned, the smaller producers, I think of those as the independents, do have the ability to be more nimble and respond more quickly. They have a different business model than the majors, and that's probably going to play out. This is going to sound maybe a little cheeky, but they're Chinese symbols for chaos and opportunity, and they share a common character, right? One is kind of the flip side of the other, and I think that's kind of true here for energy. So while the recent events are chaotic, and they're elevating energy market volatility, these same events are bringing U.S. energy companies an opportunity to contribute to solutions and change and improvements, and also profit, right?
Yeah.
And
Yeah, I'm always, I have to just let you know, I'm always struck by, in a room full of economists, when you hear an energy economist talk, what they talk about is bullish and bearish are completely opposite things to what economists think of it in those terms. But what's bullish for the oil industry may be hard for consumers, but actually as a share of the economy, we are an oil independent economy. So there is a positive here for U.S. producers, right?
Oh, I absolutely, absolutely. It's interesting, very, very interesting to see where oil prices have gone. I think we're over $110 a barrel now. I think I saw 112 or something like that the other day. But with the events surrounding supply, economic term of oil and gas in Europe, and then you couple that with what's going on in the Ukraine, you get to these really high prices, and not just oil, but also natural gas. And we think about cars a lot and electric vehicles and things like that, but really a big piece of this is heating and cooling. And that's where natural gas comes into play in a very big way. And we've seen some absolutely phenomenally high prices in Europe, kind of building up to all of this. And of course, exacerbated now by what's going on in Ukraine. So where will prices go? I've been in this industry now for the bulk of my career. Let's call it 35 years rounded. And historically, and throughout my entire career, every time oil prices have gone above $80 a barrel, we see a lot of bad behavior around the world from countries that are essentially very economically tied to oil, because they have plenty of cash flow and money, otherwise said differently, money to fund some of these activities with. And inevitably, prices have not stayed historically above $80 for very long periods of time.
Right.
And then likewise, on the other side of the equation, when they drop below, say, $35 a barrel, or get into the 20s, and we saw some of that really at the front end of the pandemic with the price war between Russia and Saudi Arabia,
Actually went
Um,
negative there for a while. That was something. You had to
yeah,
pay buyers to hold oil, basically.
it did happen. Yeah.
Yeah, April 2020.
And, unprecedented, remarkable event. But, when prices get that low, we see bad behavior there as well, but it's out of desperation.
Right.
So just because oil is so politically charged, you tend to see prices with volatility moving around in the, you know, $40 to $60, something with a 4 or 6 on it, right? 45, 65, maybe getting close to 70, but then back down into the 50s. And so, it's moving around in that sort of middle ground over the last 3 or 4 decades. Interesting to see what's happening here now, but not terribly surprising when you take the amount of oil that or oil supply that Russia contributes to the world. You de facto take that off. But then the question is, what's the response? And that's where you're asking, I believe, here about production and bringing more production online. I think there's certainly going to be, situations where, you can bring more production online for a profit, and companies will do that.
Well,
Might also just say, like Saudi Arabia or OPEC as well, and their response, not quick to bring more supply online.